please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Well, HCL Tech will be one of the stocks that will be in focus today as it has made an acquisition. Remember, it will be acquiring C3I Solutions, a subsidiary of Merck, for $60 million. Rima now joins us to give us the details. Rima, good morning. How big is this acquisition and what does it mean for HCL Tech?
Well, it's not very big for HCL Technology. The cash consideration is only about $60 million. But first, about the financials. C3I, as you rightly said, is a subsidiary of Merck. So it basically caters to the life sciences vertical and it will bolster the company's healthcare presence. Their FY17 revenues stood at $199 million. EBITDA margins at close to 6%. Now, the problem is the EBITDA margins of the acquired company at 6% is much lower than the 23% margins enjoyed by HCL Technology. Also, secondly, the acquired company's revenues have been falling for the last 2 years. So in CY15, it had revenues of $220 million, which slowed to 217, and now to close to $200 million. So one, it's a small company. The revenues have slowed in the last 2 years. It's been around for 35 years, but they've not managed to make a big mark. Its margins are lower than what HCL Technology operates at. So I think the stock could be mildly in the red today, but that said, it's not very significant. Credit Suisse says the acquisition is just about less than 3% of HCL Technology's revenues and less than 1% of their overall EBITDA. So the size is small, but acquiring it at 5 times EBITDA seems a tad bit expensive.
All right, Rima, thanks a lot for that. We'll watch out for HCL Tech. But another stock in focus will be Magma Fincorp. The company has announced a 500 crore rupees QIP. Abhishek is with us with more. Abhishek, the first QIP in the BFSI space this year?
Mangalam, the first QIP in the entire financial year 2019 per se. So, you know, Magma has launched a QIP of 500 crores. So, they are offering about 3.2 crore equity shares at a price of rupees 155 per share. So, that works out to an offer price being at a discount of close to about 7% from yesterday's closing price at NSE. Now, the net worth as on Q3 FY18 will increase by 22%. So, with a 12% equity dilution, you know, the book value can actually increase by 8%. I've taken into account Q3 FY18 book value. So the overall book value can increase to anywhere around 103 rupees per share. Edelweiss, IFL, Kotak and MK are the managers to the issue. Back to you.
That has already, that water is already passed under the bridge and we know where we are today. I think we need to take a more mature approach and more pragmatic approach to the situation, because we can't be in a situation where you leave millions of people in a lurch.
The RBI's action today is an indicator of where the government committee is likely to go, but it is definitely not that bright that you would assume it would go completely in favor of allowing everything and anything utopian that the cryptocurrency market would have wanted.
Yeah, look, I think that this is a knee-jerk reaction that's probably been in the making for some time, but it's a knee-jerk reaction to the arrest of Amit Bharadwaj this afternoon. There's a lot of people that have lost money, legitimate money, not illegitimate money, but legitimate money to scammers. That's been the biggest challenge, especially in India over the last couple of years, where scammers were preying on the less educated and less sophisticated investor.
Okay, moving on to a CNBC TV18 exclusive then, Anshu Sharma caught up with Coal India chairman Mr. Gopal Singh and began by asking him about the company's plans to achieve the 1 billion ton coal production target by 2020.
It mainly depends on the study and findings what they suggest us. But one thing is sure that yes, 1 billion will remain. Maybe a time scale that they have to suggest, depending on the demand by the market and supplies from the various other. See, so many blocks have been allotted to this captive. More than 200 blocks were allotted to the private players, though for captive use, long back in 2000 and all this. That time also people apprehended about the capability of Coal India, whether Coal India will survive. But see, Coal India has attained newer and newer heights. So this commercial mining will also provide an opportunity for Coal India to showcase its strength
Long back, there was a proposal that Coal India will enter into building a power plant. Is that proposal still around, especially when MCL, where you have a problem with evacuation, would you want to enter into that business?
No, there used to be the problem of evacuation in MCL. Today that has been taken care of.
But there are problems of coal demand and supply mismatch. There are some 12 to 16 projects which are critical or supercritical. So what is the strategy for Coal India, which is now going to face competition from private players, to supply coal in time to the power producers or the steel or any other sector which is dependent on coal?
See, higher the demand, better it is for Coal India, isn't it? Already we have, on 1st of April this year, we had more than 55 million ton of coal in stocks. So we will be always looking for the opportunity to maximize the dispatch. Right now what is happening that whatever the demand and logistics capacity that allows, that much of coal is being dispatched. And when we talk about evacuation, logistics, see there are 4 modes: road, rail, MGR, dedicated railway lines, and then your belt conveyors. And because demand is increasing, it's good that power demand is increasing in the country. So all these 4 modes have to improve their efficiency.
What is the capex plan for Coal India this year, and what will you use it for, and any plans for acquisition abroad in terms of coking coal?
See, this year our target is 9,500 crores. Last financial year target was 8,500 crores. We exceeded the target, and probably that was the first time in the history of Coal India that capex target was made, rather we exceeded. Regarding the diversification, yes, we are very much for it. We are looking for the opportunities, and we have a dedicated team. They are working it out, and as soon as we get the opportunity, we go for it.
What kind of acquisition will it be? Because there's hardly any news with regards to acquisition abroad from Coal India in the recent past. So which area and how much of coking coal reserve that you're looking for?
See, there are mainly, 4 areas we are looking for diversification. One, because we have so much of land, so we are looking for your solar power.
Okay.
Already we have defined a target for ourselves, that is 10,000 megawatt in 20,000 megawatt in next 10 years. Second is we are looking for good property, coking coal, because this country we don't have much reserve of good quality coking coal. So we are looking for an opportunity abroad where we can get some good quality coking coal. Third is metal mining, because mining is our core strength. So that's always easier for us to go for metal mining. So we are looking for. Fourth is monetization of waste. We have water, every mine. We have to pump out the water throughout the year almost. So we are looking out how to distill this water, and if we can sell it to market as mineral water or something. Overburden, that's the waste for us. We are looking for some user, whether this overburden can be made use of for some productive purpose, which can fetch us some financial terms also.
All right.
Well, shares of Strides, Shasun and Sequent Scientific will turn ex-date today, as the commodity API business of Strides and the human API business of Sequent will be demerged. Ekta now joins us with more details. Ekta, good morning. Over to you.
Hi, thanks Anisha for that. Well, like this was expected and you mentioned, it is the commodity API business which is demerged from Strides, as well as the human API business of Sequent, which will now be demerged, and hence both these stocks are going to trade ex of these businesses today onwards. Now, it is important to note that basically this is expected to show an adjustment of around 40 to 50 or up to 50 rupees for Strides. That's what analysts are estimating. But remember that yesterday itself there was a little bit of an adjustment which had taken place for Strides, and for Sequent, which is around whereas the human API business around 30% of their total sales, we will see an adjustment therein as well. Now, what exactly is going to happen with these API businesses is that they're going to be merged together and eventually relisted on the exchanges. The total revenue or the size of the business should be around 1,200 crores as of FY18 in terms terms of revenue. Net, it is definitely a positive, or assumed to be a positive for Strides, because the commodity API business margins are lower. Plus, there is debt of over 400 odd crores, which will be transferred to the combined entity. And for Sequent, it will then now become a completely animal-focused company, because there will be no human API business, which was the last of the human or people business which was available in the company.
Right, Ekta, thanks a lot for that. We'll watch out for that adjustment. But let's move on to the commodity space now. Manisha Gupta joins us with the updates from that arena. Morning, Manisha.
Morning. Hi. Thank you for that. Well, the crude oil prices have seen some strength back as the global inventories seem to be declining. Of course, there is a lot of uncertainty still as we look at the spat between the U.S. and the China, with U.S. now considering $100 billion in additional tariffs to China. So it looks like that is not going to die before this weekend. But in the meanwhile, you also have seen the Saudi Arab hike official crude oil prices. That is a positive. But then again, the strength in the U.S. dollar is weighing on to this space. So there's just too much of contradicting fundamentals and events that the markets are dealing with right now. In the meanwhile, the metal space is headed for a steady weekly close this time around. You have the copper prices off 3-month lows that they hit last week. There also is some strength that you have seen come back in nickel and aluminum because of the decline in inventories on Shanghai. China markets are shut today, so you wouldn't get too much of cues from the Asian markets, and you will have to wait for the Europe to open. But the even more interesting session is going to be in the U.S. As you have the U.S. non-farm payroll data coming, and the U.S. Fed chief, Jerome Powell, is expected to make a statement on markets. These are a couple of events that would be the most important before this weekend.
Okay, Manisha, we will keep an eye out on those important events. But now let's shift focus to the derivative space. Mangalam, you were telling us earlier that you noticed a lot of short covering in the markets. Is that the cue that you'll be looking forward to today as well?
Absolutely, Anisha. You know, you said it there, because yesterday's up move, if you take a look at the Nifty and the Nifty Bank, both of them shed open interest worth about 3% and 12% each in yesterday's session. More so Nifty Bank, given it was the weekly options expiry as well. So if you take a look at what the FIIs did, in fact, in index futures, they covered close to around 16,000 shorts. There was short covering in index calls as well, both Nifty and Nifty Bank put together. The FII short exposure now reduces to 80%. However, the FIIs are still net short. Any up move will be interesting to see whether there is short covering or maybe there is more downside as the up move is sold into. The maximum open interest is at the 10,000 put. Yesterday we saw a lot of writing at 10,200, 10,300 puts given the up move that we saw, and the 10,200 and 10,300 calls saw some covering. In terms of stocks, the PSU banks, they rallied yesterday. So Canara Bank, Bank India as well as Bank Baroda, all of them saw fresh long positions being added. Some shorts covered on Hindalco and Balrampur Chini in an otherwise strong market. That stock lost and saw additional shorts being added out there. Short point, there was a lot of short covering. Whether that sustains or not is something we have to see. With that, it's a wrap on Power Breakfast, but you stay tuned to CNBC TV18.